talking about how to minimize the taxes on our retirement home. And let us welcome the managing partner of the Mendoza, Navarro, Mendoza and Partners Law Offices, in which he is an estate planning practitioner, a certified management accountant of Australia, and a registered financial planner. He is a regular lecturer of the Chartered Trust and Estate Planner program by the American Academy of Financial Management and one of the lecturers of RFP Philippines, a leader in financial education in the Philippines. So, let us wait no more. Let us give a round of applause to the book author of Happier Heir, Guide to Successful Estate Planning, Attorney Edgar V. Mendoza.
For a while, huh? Morning. So marketing is always morning, right? Yes. Okay. My topic is the end of the presentation of Mr. David Lichu, how to reduce taxes on retirement income. And siguro bigyan ko yung konting bonus how to also, di ba, yung retirement of your children's children. So we put a little part ng estate planning. So let me start with a story. Sandali ha, may technical problem. Topic, reducing tax in retirement. So, let me start with the story of Elvis Presley. But there are people come to us in our lifetime, once in our lifetime only, and Elvis Presley is one of them. So, tingnan natin the story ng the King of Rock and Roll. Elvis Presley earned more than $1 billion during his career. So why was his estate worth only about $10 million when he died? So how did things get even worse for his heirs afterwards? There can be no doubt that Elvis Presley truly earned his nickname as the King of Rock and Roll. His lifetime earnings topped $1 billion over his 25-year career. Especially impressive considering this came in the 50s, 60s, and 70s. Some of Elvis' financial success is attributed to his manager and promoter, Colonel Tom Parker. He helped Elvis secure unprecedented movie deals, paying him top dollar, about $100,000 per movie in the 50s and 60s. Imagine how much and today. And up to 50% of all movie profits too. Later, Parker secured a $125,000 per week deal for Elvis with a Las Vegas hotel. That's about $800,000 a week in today's dollars. So, Elvis certainly enjoyed spending his earnings and was very generous. He frequently bought Cadillacs to give away to employees and members of entourage called the Memphis Mafia. So the cost of maintaining his famed Graceland estate was massive, and Elvis mortgaged it late in his life to help continue his lavish fare. Before Michael Jackson, he was the highest earning debt celebrity. Diba? So he's better in debt than in life. Tingnan natin, bakit? His well-paid employees included a host of bodyguards, drivers, managers, and of course, his favorite hairdresser. So by the time of his tragic heart attack on August 16, 1977, Elvis Presley's bank account had only about $5 million, and his total estate was worth a reported $10.2 million. Ano nangyari? So most of us dito is mga financial planners. Ano nakita niyong kulang kay Elvis Presley? Diba? He lacked what? Financial intelligence. You know the story about the Edgewater Beach Hotel incident in Chicago in 1923? Anyone? $9 great leaders and richest businessmen gathered in Chicago. Sino-sino yun? Charles Schwab, owner of the largest steel company. Si Samuel Insull, owner of the largest utility company. Howard Hobson, owner of the largest gas company. Sino pa? Si Ivar Kruger, President International Match Company. Si Leon Fraser, President of Bank International Settlement. Richard Whitney, President of New York Stock Exchange. And of course, si Arthur Cotton and Jesse Livermore, author of the book about stock trading, the world's greatest stock trader. And of course, si Albert Fall, member ng Herding Cabinet. 25 years later, what happened to these great leaders and businessmen? Charles Schwab died penniless after living for 5 years on borrowed money. Samuel Insull died broke in a foreign land. Howard Hobson went insane. Ivar Kruger died broke. And Leon Fraser committed suicide. Richard Whitney was just released from prison. Arthur Cotton died broke. Jesse Livermore, the world's greatest stock trader, committed suicide. And Albert Fall was just released from prison. So it doesn't follow that if you're good in business, you are good in investing. Diba? So magkaiba yung investor and businessman. So that is what is lacking, diba, with Elvis Presley. So, given that he was the highest paid entertainer in the world in his prime, and the highest single taxpayer in the United States, this seems almost paltry. So during his time, Elvis was the biggest taxpayer in America. Elvis prided himself on the massive amount of taxes he paid. He had no tax plan, no tax shelters, and got little or no tax advice. He couldn't outspend his income, although what for financial planners is, anong mga golden rule on personal finance is save and invest. Sa kanya is what did he do? Diba? Spend and save kung meron. Diba? He couldn't outspend his income. Money literally came in faster than he could get rid of it. After the excessive income taxes and estate taxes were paid, and because of pitiful planning, Elvis' estate was incredibly small. The government got it all because Elvis Presley lived for the day and didn't plan for his future. His estate lost 73% of taxes, leaving only $2.8 million of his $10.2 million estate to his beneficiaries. So this was a voluntary loss. He didn't take time to plan, to show his heirs that he cared about what happened after his death. So Elvis Presley's estimated worth today is $300 million because he was better in debt than in life. He was no longer spending. So yung kanyang mga executors and trustees did a very good job, diba, on investing yung royalties and fees that he earned. So, if you notice dito, as we go along, because our topic is all the retirement income, this is about converting, diba, transforming yung earned income, yung working income natin into a residual income, passive income. So, I will show to you different sources ng residual incomes and how we can save taxes on that. According to Judge Learned Hand, there are two systems of taxation in our country, one for the informed and one for the uninformed. Actually, it's the same judge quoted by justices of the U.S. Supreme Court, imagine that, who said that there is nothing sinister in arranging one's affair in order to reduce your taxes as low as possible. So there's nothing wrong. Yan ang tinatawag nating tax avoidance. Okay? And let us recall yung ating financial roadmap before I start discussing yung ating main topic about how to reduce taxes on retirement income. Let us start with what is most important to us, mindset. So alam natin that, for example, that money is simply an idea. If you believe that it takes money to make money, you will remain poor forever. Tingnan mo yung Instagram. Instagram ba yun? It was sold to Facebook for $1 billion. Ilang employees lang meron ng Instagram? Only 12 employees. So, where is our asset? So, 90% of the asset of any company is in the mind of their executives. Correct? So, let us start with mindset. Tingnan natin. In 1983, for example, kilala niyo si Richard Branson? And he's the founder of the Virgin Airways, right? So in 1983, he was stranded on Beep Island, that is part of the Virgin Island. Kaya ngayon ang name Virgin Airways, di ba? So when the local Puerto Rican airline informed the passengers in Beep Island that the flight was cancelled, kung kayo yun, anong reaction natin? Of course, we will be very angry. So, Richard Branson had a very important appointment in New York, but is to pass through Puerto Rico, and since the flight was cancelled, ano reactions ng karamihan merong important appointments? Everybody got mad, except Richard Branson, because iba yung kanyang mindset. So, let us look at this. Exact same events, pero different mindset. So, what Richard Branson did was to call a charter airline company in Puerto Rico and ask how much to charter the plane. Then, he walked around with a placard, $39 a seat. Kumita pa siya. Di ba? So, ano nakita nyo? Exact same events, different mindsets, different thoughts, would lead to different actions, and actions would lead to different results. Correct? So mindset is the start of everything sa ating planning. Of course, we put everything and we set up a goal and a plan. And of course, we put it in writing. And if we put it in writing, we are making a commitment. Johann von Goethe, Germany's greatest philosopher, once said, once we commit ourselves, providence follows too. That is why, when you put your goal in writing, it will become true. This is how we do. We increase income, we reduce expenses, and we grow. Ay mga financial planners. I'll show you different financial planning tools, preparatory dun sa saving of taxes, and we know that part of our duties is to make the money grow. But, merong curse, as the Chinese believe, that the first generation creates the wealth, the second generation expands, and the third generation squanders. So unless we do something, and how to prevent it is to accumulate and accumulate more assets. Assets as defined by financial planners, not defined by accountants. Kasi sa financial planners, an asset is anything that puts money in your pocket. Positive cash flow, as the lecturer before said. Correct? So accountant, even liabilities or expenses can be an asset. Meron silang tinatawag na prepaid expenses. Okay? And of course, this is now our role, is to protect them. Protect them for many generations. So not only for one generation, but for many generations to come. In the US, where we have what we call a dynasty trust. It could exist forever. Walang silang, many states in the United States, walang rule against perpetuities, so it can exist forever. So that is what we should do. How to protect the money that we earn through hard work, through our sweat and blood for many, many generations. Okay? Retirement. How much money do I need to have before I can retire? Is this a correct question? Diba? When we are lost, we do not know how and what to ask. That is correct, diba? You know the story of Alice in Wonderland? When she got lost in a forest, nandun siya sa fort, then she asked the cat, Mr. Cheshire Cat, tinanong niya, Mr. Kat, which way shall I take? Ang tanong sa kanya ng Kat, where do you want to go? Sabi ni Alice, I don't know. Then it doesn't matter. Diba? So when we are lost, we do not really know how and what to ask. So how much money do I need to have before I can retire? So ang dami yung sasabi is 500,000 or 1 million or 10 million. But is that a correct answer? Kung mag-search kayo sa investment forum, i-google ninyo, and many will give you advice. Oh, you need this, and you invest this, and you will earn how much? 100% return. But history will show that the greatest investor of all time, Warren Buffett, just earned 23% per annum. That's the highest, except for 1 year. Diba? Eh, maraming naniniwala sa atin that our money can earn 300 times in 3 months. Diba? Correct? So what is the right question? The right question is, how much money will I get each month without working? To maintain yung lifestyle ninyo, and at the same time, you can transfer yung savings ninyo to your children and children's children. So it will pass one generation. So how much money will I get each month without working? This is translating yung ating earned income into receivable income, meaning we earn even while we are sleeping. And our children will earn while they are sleeping, and our children's children will earn while they are sleeping. Diba? That is our role today. Ito yung sources of retirement income. Sorry lang. Pensions is one. Discuss natin ito isa-isa, maya-maya. Then, annuities and insurance. Tingnan natin how we can save taxes on this. And trust funds, mutual funds, sale of bonds, rental income, real property investments. Mr. Lichu just explained this a while ago, diba? And they're all passive income. You notice, investment in stocks, interest income, royalties, personal equity, and retirement account. So, i-discuss natin to one by one. All the business income is also a source of passive income. If you develop a system like McDonald's. So even if you go away, kahit natutulog kayo, kumikita pa rin yun. Okay. Pension and retirement benefits. Amount of money received in lump sum or on a staggered basis in consideration of services rendered. As a rule, pension is part ng gross income. So, ano ba yung mga part ng gross income? Ang presumption is that all income taxable. So, ang mga general principles natin is that taxation is the rule, exemption is the exception. So, but in case there is doubt as to the interpretation of any provisions of the tax code, the doubt shall be resolved in favor of the taxpayer. So, pension is part of the gross income. Anong mga excluded sa gross income? Like insurance proceeds. Whether revocable or irrevocable, they are excluded. Iba yung for estate tax purposes. Ha? On estate tax purposes, it should be irrevocable. And under Section 11 of the 2013 Insurance Code, if the designation is not changed, it is deemed automatically irrevocable. But generally, they're not part of the gross income if they are excluded by law or treaty, or they are already subject to another national tax, or they are just return of capital or damages. Yun ang general principles. So pension is generally taxable unless exempt by law. Ayan. Pensions are being given after the individual reaches the age of retirement. So, ano yung age of retirement? Ha? Iba-iba sagot. May 60, 63, 65. So, it is exempt from income tax as long as you retire at the age and completed the term of service required by laws. Ito yun. So, employer's benefit plan. If the BIR approved benefits is greater than the benefits provided under Republic Act 7641. Republic Act 7641 is yung amendment sa Labor Code. It says that if you reach the age of 60, but not more than 65, entitled ka ng 1/2 month for every year of service, plus 1 12 and 13-month pay mo. Yun ang retirement pay mo. But, kung BIR approved plan yun, you can retire at age 50 with 10 years of service, same employer, and that would be tax exempt. Although you cannot see in the tax code yung BIR approval, you can only see it in the regulations that implemented it. And recently, the regulation is Revenue Regulation 39-2014. So, employers' benefit plan, if the BIR approved benefits equal or less than the benefits in RA 7641, and you're retired at age 60 to 65 with 5 years of service, that would be tax exempt. An employer's benefit plan, if not BIR approved, you retire at age 60 to 65 with 5 years of service, that would be tax exempt. So employers, no plan at all, and you retire at 60, 65, again, 5-year service, no tax. That would be tax exempt. And SSS, GIS, US veterans, that would be exempt by law. So all other pensions, including benefits not covered in the above, tax exempt status are taxable upon distribution. So naintindihan po natin yun. So, mamaya explain ko, may example ako doon, yung mga deferrals. That is one. Another is annuities, insurance endowments, and pre-need plans. Employers' private benefits plan may be placed in these non-trusted schemes. Actually, to be exempt, yung pension niyo, it must be placed in the bank. Kung si insurance yun, hindi yun tax exempt. Usually, yung trusted plans, sa bank lamang yun. So, but yung annuities, yung return of premium, sabi nga natin kanina, excluded sa gross income is return of capital. Return of premium is a return of capital. Therefore, they are not taxable. Yung pre-need plans, they're not taxable. Kasi if you put them in mutual funds and the pre-need company already under the jurisdiction of Insurance Commission, because taxes there already were withheld. So wala na dapat tax yun talaga. So superfluous lang yung provision sa pre-need plan law na ng distributions ng pre-need benefits to the plan holder, di ba, is tax exempt. There is a specific provision sa pre-need plan. Okay? So the amount received by the insured as a return of premiums paid by him under life insurance endowment, since they are return of capital, they are tax exempt. Investment plans are considered non-trusted. All income or earnings derived are subject to income tax. So yung over and above, dun sa return of premium would be subject to income tax. Kaya lang, they are taxed upon distribution. So habang nandun yun sa plan at hindi mo wini-withdraw, di ba? Yung reinvestment doon would be undiminished by any taxes. Trust funds. Individual trust fund, common trust fund. Meron din tayo example ng unit investment trust fund. So trust is the superstar of estate planning. Ang power nito is unlimited. You are only limited by your imagination. This is one of the uses of trust. Banks are using it. So, tingnan natin. So, it constitutes all property placed under trust, which includes money, securities, real as well as personal property. So, a trust fund is created for the purpose of administering the property for the use or benefit of the trustor or others. So, yung administration of trust funds is governed by a document. The trustee does not promise a result. Instead, he offers his assistance to achieve the desired results. The trustee does not do business with the client. As in the case of depositor bank business like an agent, he is doing business for a client. two kinds of trust, irrevocable trust and revocable trust. Ang irrevocable trust it is considered a separate taxable entity, or also, of course, separate legal entity. Revocable trust is a separate legal entity, but not a separate taxable entity. Do you know the difference, di ba? So, if you create a trust and it is revocable, it's like a box, and you put assets on it, they will not be subject to any tax because it's not a completed gift. Meron tayong principles sa taxation like realization principles and closed and completed transaction. So it's not a completed gift. So walang tax. Kaya yung mga UITF, Unit Investment Trust Fund, diba? If you put something on it, diba? It is a revocable trust. So yung paglagay mo doon, actually, hindi yun subject sa donor's tax because it is not a completed gift. Except that when you invest it, yung bangko, yung trustee, would invest it sa investee bank, then that would be subject to usual interest rate or dividend. Depende kung sino yung nag-i-invest. So, for example, if I put money to irrevocable trust, and irrevocable trust is both a separate legal and taxable entity, you will not be subject to donor's tax if the amount does not exceed 100,000 pesos. Each, di ba? Spouse. So a total of 200,000. Like if you put money sa living trust account, 100,000 a year, kayong dalawang mag-asawa, so that would be 200,000. You will not be subject to any donor's tax because the first 100,000 is exempt. And secondly, is that it is exempt by law, and it will have a separate personality distinct from that trustor or grantor. So, it avoids estate tax, and it avoids also probate. Okay? Ang revocable trust doesn't avoid estate tax, but it avoids probate. Ang unit investment trust is a kind of revocable trust, but gain on redemption shall not be taxed anymore because every earned income during participation is taxed already. Okay? Mutual funds. A mutual fund pools the funds of many individual and institutional investors to form a massive asset base. So the assets are then entrusted to a full-time professional fund manager who develops and maintains a diversified portfolio of security investments. So people who buy shares of mutual fund are its owners or shareholders. Their purchases provide the money for a mutual fund to buy securities such as stocks and bonds. So a mutual fund can make money from its securities investments in two ways. A security can pay dividends and interest to the fund, or security can rise in value. So the fund passes any dividends, interest, or profits on the sale of its portfolio of securities, less fund expenses to shareholders in the form of distributions. So income earned is taxable, and taxation depends whether it's a dividend or gain from sale of securities. Since bumili kayo ng shares sa investment company, like palagay natin Sun Life Prosperity Fund o Film Life Balance Fund, so it's an investment company. So the investment company, when they invested yung money ninyo, another company, if that is investment in another company, that would constitute an intercorporate dividend. Ang intercorporate dividend is not subject to tax. 0%. Normally, domestic and residential and resident foreign corporation. But gains from redemption of shares in mutual funds is tax exempt. So if you redeem shares of stock mo sa mutual fund, that would be tax exempt. So that is a way to minimize taxes. Not only to minimize taxes, but to totally eliminate them. An example. Government debt instruments, securities, currency deposits, yield deposits, generally 20% ang rate. Residents, citizens, and non-resident aliens engaged in trade or business, dyan nag-apply. And if you're non-resident alien not engaged in trade or business, that would be 25% subject to tax treaty. Really, kung merong tax treaty. Ang long-term deposits, investment certificates, generally is 20% kung pre-terminated, 3 years and below. So 12% kung 3 to 4, 5% kung 4 to 5 years. And 5 years and up, it would be exempt. Even non-resident alien not engaged in business, pag ang investment mo would mature more than 5 years, that would be interest tax-free. Except corporations. Ang corporations, walang holding period. The rate is always 20%. Expanded foreign currency, pag non-resident ka, whether individual or corporation, that would be tax-exempt. Sales of bonds, debentures, and other forms of indebtedness. So, gain realized from the sale of or exchange or retirement of bonds with a maturity of more than 5 years is tax exempt. Investment is tax. Ang investment tax is not subject to income tax. It is subject only to stock transaction tax if listed and traded sa stock exchange. That is 1/2 of 1%. Kaya karamihan nga, if we do not have any proof of income and at may imbestiga tayo ng BIR, of course we just say naglalaro tayo sa stocks because wala namang income tax return na pinafile. Ang broker lang ang nag-file sa atin. Shares not listed and traded in stock exchange is subject to 5% sa first 100,000 and 10% in excess of 100,000. Ayan. Pag ang dividend is distributed to individual, is 10%. Pag individual, non-resident alien engaged in trade or business, 20%. Not engaged in trade or business, 25%. Stock dividends, since walang change sa ownership, that would be exempt. Ang intercorporate dividends, if yung corporation mo, for example, holdings, may investment in another company, yung dividends received by your holding company, they are tax exempt. Okay, ito yung real property investment. Of course, it's a source of passive income. If we sell yung ating real estate, it depends on classification. If it's an ordinary asset, it is subject to creditable withholding tax of 6% plus value added tax of 12%. If it is a capital asset, we have a final tax of 6% and there is no value added tax. So your residential lot valued at 1,919,500 or residential house and lot valued at 3,199,200 or less, CWT, nagre-range from 1 to 6%, or capital gains tax, but there is no value added tax. So it depends on yung classification. Pag pinaparenta nyo yung inyong bahay, all this bahay, it will become ordinary asset, and it will be subject to value added tax when you dispose. Okay? Rental income. It is amount paid for the use ng property ninyo. So normally, pakita na lang natin yung rate. Pag commercial yon, wala nang threshold yan. VAT yan. Yan. Subject to VAT. If your VAT registered, your annual receipt was greater than 1,919,000. Non-VAT, if it's less than 1,919,500. And income tax, yes. 5% expanded withholding tax, yes. Kung residential yan, ito yung requirements. If it is greater than 1,919,500 and monthly rent mo is 12,500, that would be subject to VAT. Kung less than 1,900,500, but your monthly rental is 12,500, is 3% percentage tax. Kung less than 12,500, regardless kung magkano yung receipts mo, that would not be subject to VAT or percentage tax. Ganon din yan sa personal, katulad ng car, is the same threshold. Okay? Bilisan ko na lang. Royalties generally 20 or 10%. have to fast track. I have very limited time. Sana at least 1 hour. But we have very limited time. And I have to fast track. Tingnan na lang natin. Yung personal equity and retirement account. This is a very powerful tool of estate planning. And of course, the latest status now is that hinihintay na lang yung RMO ng BIR. So with this, if this becomes effective, actually the law was passed in 2008. The revenue regulations were already formulated. Even the BSB circular, except that wala pa yung revenue memorandum order. Yun na lang hinihintay. So, yung investment mo dito, na 100,000 for non-overseas Filipino, each spouse is entitled to 100,000. Yung overseas Filipino would be entitled to 200,000 pesos. Yung investment mo doon and reinvestment would be practically exempt from income tax. This is the equivalent of 401k in the US. And of course, yung distribution nito pag namatay ka is excluded from estate tax. So, hinihintay natin ma-implement ito. This is really very powerful. And if this become effective, ang laking pakinabang po nito. Yan ang tax benefits. Tax planning strategies. Increasing deductible expenses, deferrals, conversions, eliminations, timing of income expenses. Ito yung mga tax planning strategies natin. Bigyan an example. For example, clustering. You have the choice to either capitalize or expense outright major cost of repairs and maintenance of your lease units. So your taxable period, when your rent income is high, you may fully deduct this cost, pati impairments and write-offs. This is a strategy. So, yung income, actually yung rental income ninyo masyadong malaki, pwede nyo i-divide yung mag-asawa. So, kung palagi mo 2 million nyo, lumampas ka sa threshold, since each spouse can file separate return. Okay, joint return but separate computation. So, ang exemption ninyo would be different. Non-trusted, non-BIR approved pension plans. May benefit din ang not approved BIR pension plan because yung reinvesting the amount is undiminished by tax and you accumulate more earnings in the future. Kasi sabi nga natin sa realization principle, until it is distributed, it will not be subject to tax. So kung naandun lang siya sa plan, kahit hindi siya approved ng BIR, wala pong tax. It keeps on accumulating. Katulad ng savings component na insurance, so walang withholding tax, di ba? So it keeps on accumulating. And conversions, you can shift your income. If you are a taxpayer classified in a high income tax bracket and you own a business during your retirement, you may shift your income from the business to your child, who's classified in the lower income tax bracket through an exempt gift. Sabi nga natin yung first 100,000 is exempt. Kaya if you donate the shares of stock to your child, 100,000 pesos worth, that would be tax exempt. You're shifting your income. Or you can create an irrevocable trust. Pwede yun, as long as the beneficiaries are different. May separate tax identification number yun. Okay? Transforming income. Your rent income, your residential unit mo transform mo to commercial unit. And you have also right to transform your stock investment to a listed and traded stocks. And that would give you 0.5%. And ordinary assets, katulad ng holdings. If yung real property investment mo, pinarent mo, but for 2 years hindi mo siya ginamit, you reclassify it, it will become capital asset, and that would no longer be subject to value-added tax. That is converting, transforming income. And elimination. Okay, for example, give to charities. Wala namang masamang magbigay, di ba? So, like ko sinasabi, no one has ever become poor by giving. Kasi kung nagbigay ka, sino ang nagbe-benefit doon? Diba nagbe-benefit doon yung nagbigay, right? Because if you give, you believe that more is coming. And if you believe that more is coming, you become happy. Anong key to success? Success is not the key to happiness. Happiness is the key to success. Diba? So there's nothing wrong about giving. So if you give to your children, you give to charities, your taxes would be eliminated. Yung BIR-approved pension plans are benefited from tax exemption both on the earnings and the distribution of the benefits to the employees. Katulad ng deferred compensation. Diba, instill loyalty among employees. And it is not tax kasi hindi mo pa binibigay. Deferred and tuck in doon sa retirement plan mo. So, the taxes are no longer are not imposed because two conditions ng BAR. If yung proceeds na kinuha mo sa retirement would represent your personal contribution or it would represent in tax-exempt retirement or separation pay. So, pag yung nakatuck in yung compensation mo sa retirement program mo, then that would be tax-exempt. And timing of income expenses, and of course, for example, if you sell other capital asset, like yung foreign shares of stock or yung short-term commercial papers, that is capital asset, subject yan sa whether it's a short-term or long-term capital gain, short-term or capital losses. So, if you dispose of your shares of stock after 1 year, 50% lang ang itatax doon. So, yung timing of income expenses, very important. Okay? So, before I end, tingnan natin to. So, I started this story, so I would like to end with this story. Okay. Basahin natin, no? Okay. So, he would miss the paycheck, but he needed to retire. They could get by. The contractor was sorry to see his good worker go. And asked if he could build just one more house as a personal favor. So the carpenter said yes, but in time it was easy to see that his heart was not in his work. So he resorted to shoddy workmanship and used inferior materials. It was an unfortunate way to end his career. When the carpenter finished his work and the builder came to inspect the house, the contractor handed the front door key to the carpenter. "This is your house," he said, "my gift to you." What a shock, what a shame. If he had only known he was building his own house, he would have done it all so differently. Now he had to live in the home he had built none too well. So it is with us. We build our lives in a distracted way, reacting rather than acting, willing to put up less than the best. And at important points, we do not give the job our best effort. Then with a shock, we look at the situation we have created and find that we are now living in the house we have built. If you had realized you would have done it differently, think of yourself as a carpenter. Think about your house. Each day you hammer a nail, place a board, or erect a wall. Build wisely. It is the only life you will ever build. Even if you live it for only one day more, that day deserves to be lived graciously and with dignity. The plaque on the wall says life is a do-it-yourself project. Your life today is the result of your attitudes and choices in the past. Your life tomorrow will be the result of your attitudes and the choices you make today. Okay, so last two slides pa. May last two slides pa tayo. Pasensya na. So retirement is not the end. So although you fulfilled all your professional ambitions, now is the time to achieve your personal aspirations. Retirement is just the start of life's golden phase. Give your childhood dreams one final chase. So remember, every day is a gift, and the quality of your life is your gift to yourself. Thank you and good day.
Thank you, Attorney Mendoza, for that exceptional presentation about trust and estate.